All right, let's jump right in. Today, we are talking about a tool that is absolutely essential for any business, whether you're a startup or a huge corporation. It's the cash book. Think of it as the command center for your money, and we're going to break down exactly how you can master it.
So, it really boils down to this one simple question. How do you keep track of your most important asset, your cash? I mean, if you get this wrong, a business can get into some serious trouble, even if it looks profitable on paper. And the answer? Well, it's all about mastering the cash book.
So what is a cash book really? You can kind of think of it as having a secret double life. On one hand, it's what we call a subsidiary book, basically a daily diary where every single cash transaction gets written down first. But here's the really cool part. It's also a principal book. That means it acts as the official cash and bank account in your main ledger. It's doing two big jobs all at once, which is incredibly efficient.
And you know, it's this dual role that makes the cash book so incredibly powerful. It's not just some running list of transactions, it's a fully integrated part of your accounting system. It's the one place you can go for the absolute truth about all your cash movements.
To really get how this all works, let's start from the ground up. We'll look at the most basic version there is, the simple cash book.
The layout is beautiful in its simplicity. Seriously, it works just like a basic T account. On the left side, you've got your receipts. That's where we debit all the cash that comes in. And on the right side, you've got payments. That's where we credit all the cash going out. Money in, money out. It really doesn't get more straightforward than that.
Balancing it at the end of the period is just as logical. First, you add up all your receipts. Then, you add up all your payments. And here's the golden rule. You can't spend cash you don't have, right? So the receipts total will always be bigger. That difference is your cash on hand. You just plug that number into the payments side to make both columns equal, and then carry it down to start the next month. Easy.
Okay, so that handles cash perfectly. But let's be real, business transactions often involve things like discounts. So to manage that, we need to level up our cash book and add another column.
So why bother with an extra column? Well, it comes down to pure efficiency. Think about it. Businesses are always offering little discounts to get customers to pay on time. By having a discount column right there next to the cash, you record both things at the exact same moment. It saves you from having to make a whole separate entry later on. It just streamlines everything.
So here's what the new and improved layout looks like. On the receipts side, we pop in a column for discount allowed. That's the discount we give to our customers. And over on the payments side, we add a column for discount received. That's the discount our suppliers give to us. The cash part? That stays exactly the same.
Now listen up, because this is a really important detail that catches a lot of people out. Unlike the cash columns, you do not balance the discount columns. You just total them up. That's it. Discount allowed is just another business expense, and discount received is income. You post the totals, and you're done.
Okay, so we've got cash down, and we've got discounts down. But these days, most business transactions flow through a bank account, right? To get the full picture, we need to bring everything together in what I like to call the financial command center, the three-column cash book.
And here it is, the whole shebang. Now you've got three money columns on each side: discount, cash, and bank. This one document tracks every single dollar, whether it's cash in your hand, a check you've written, or a direct bank transfer. Everything is right here, all in one place.
Now, this three-column format introduces a really unique kind of transaction. It's called a contra entry. This is simply what happens when you move money between your own cash and bank accounts. For example, say you take $100 from the cash register and go deposit it at the bank. Money is leaving your cash account, but it's entering your bank account. That's a contra entry.
And this is where the system is just so clever. See, a contra entry shows up on both sides of the cash book. You'd credit the cash column and debit the bank column. To show that the transaction is complete right there, we just mark it with a C in the folio column. That little C is a signal that says, hey, the double entry is done. Nothing more to see here.
So you can see why this is the go-to for so many businesses. You're basically building your cash and bank accounts at the same time. Those internal transfers are super easy to spot and check, which cuts down on errors. But the biggest win? You know your exact cash and bank balances at any given moment, just by looking at this one page.
Now, the three-column book is amazing for tracking the big, important transactions. But what about all the little things? You know, buying stamps, paying for a taxi, grabbing coffee for a client. Clogging up your main cash book with dozens of those tiny entries would be a total nightmare. And that's where another tool comes in, the petty cash book.
So most businesses use something called the Impress system. It's really simple. You give a junior cashier a fixed amount of cash. We call it a float, say $100 at the start of the month. They use that float to pay for all the small day-to-day expenses. Then at the end of the month, they add up everything they spent. Let's say it was $85. The main cashier just gives them exactly $85 to bring their float right back up to that original 100.
The genius of this system is that it does three things really well. First, it saves the main cashier from being constantly interrupted for tiny amounts of cash. Second, it keeps the main cash book clean and focused on the big ticket items. And third, by putting one person in charge of a fixed fund, you get really tight control over all those small payments that can so easily add up.
So when you put it all together, you have this powerful three-column format for all your major funds, and it's supported by a nimble petty cash system for all the small stuff. The cash book stops being just a record. It becomes a dynamic, powerful command center for managing your money.
So, let's do a super quick recap. We've seen that the cash book is this unique hybrid. It's both a daily diary and an official ledger. We saw how it evolves from a simple cash-only book to the powerful three-column version that tracks cash, bank, and discounts. We figured out contra entries for those internal money transfers, and we saw how a petty cash book is the smart way to handle all those small expenses.
At the end of the day, these aren't just a bunch of accounting rules, they're tools that give you visibility and, more importantly, control. So I'll leave you with this question to think about. Now that you understand how the command center works, how well are you actually commanding the flow of cash in your own world? Thanks for joining me.